The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. This is Friday, the 22nd of November, and it's my pleasure to be here Monday through Friday, every market day. 877-927-6648 is the number to call. You know, this is a very interesting time. We're looking at the end of the year. We're looking at retail being extremely selective. There are some retail stocks that are just getting slammed, and others are acting as if they were, in fact, biotechs or high-tech stocks. Unbelievable chart patterns to the upside. While I'm looking at these different indexes, what I had said to my subscribers this morning, I wonder if I can even find that. Probably not. I had, as part of my overview, every day I have the Dow chart that I show. This chart right here. This chart, I explain exactly what's going on, at least what I'm in terms of the waveform. If the Dow takes out 16,030, goes to 16,031, which appears quite likely it could do today. I'm going to have to call that leg C. I don't think it's a G. It's really a leg C because the MACD is still, the fast-moving average is still strong. The stochastic is at 86%. It has not worn out its welcome. It is still acting technically very good. So that's just the way I have to look at it. And as a result, we got stopped out of our short position on the Dow for a very tiny, a couple of cents loss, I believe it was. I'm just trying to, I think it was 8 cents. Yeah, it was 8 cents on a 300% short position. Not bad. Now, this is what's really interesting and fascinating to me. What I said to my subscribers in the section that I call the overview, I had said today, I wonder if I can find it. It's worth finding it. I'll try to find it during the break. It's an overview and market today. And in that section, I usually talk about this little quintile right here, the set of 5 indexes. Here's the 120-minute Dow chart, and I explain what's going on. Now I should explain that it's as soon as, if it goes above 16,030 to 16,031, this becomes A/F. So far, it looks like it's also F/A in the 120-minute chart. There's an alternative wave count because there's no weakness, and I just have to consider that it's maybe a recycle from that beautiful trend line support. The volatility index, now this is what I had said in my overview section, just a really huge, the lettering was 7 times the size that it normally is, whatever it is. And it said, the question was, what is it all about? What drives the market? And basically what I said was the VIX and the trend. A high VIX or a low VIX is very important. Sorry, not the trend. A high VIX volatility index or a low VIX, which is telling you about buying pressure or selling pressure. To me, it's as simple as that, and good news and bad news. When you get the two in concert, no news, and the volatility index going down, that's considered good news, and the market can weather the storm and push higher. The moment there's bad news, that's not good enough. It has to be consistent bad news, and it has to be followed by buying pressure in the buying pressure in the VIX, pushing it up, which tells you that it is that the volatility index is representing in the market selling pressure. So it's the opposite. The VIX rallies, and it tells you that there's a lot of sellers, a lot of buyers of the VIX, a lot of sellers in the market. And if the volatility comes down, it tells you that there are not that many sellers in the VIX, and there are buyers in the general market. I try to make it as simple as possible. Volatility index at 12.63, way off the peak D high in the Chapman Wave methodology. Go from a peak A to a B to a C to a D. That's when you can get your sharpest decline. Lo and behold, 13.94. down to the low yesterday of 12.20. What was it? 12.44. And right now it's trading at 12.63. Up a little from yesterday's lows, but still down 0.03. The Dow itself is down 4 at 16,014. The S&P is down 2.5 at 1798. The composite index, let me just move there. The composite index is in fact up 12 at 3981. Gold is being, there's some buying here. It goes up about $1.20 at 1244. High-grade copper is stuck at about 3.20. Silver is down just a fraction. It's at 19.88. Bonds are up 12.30 seconds at 131.21 30 seconds. Dollar is down about 28 cents at 80.79. I want to look at something that I consider right now to be very intriguing. In a number of charts, especially the E-minis, the December E-mini, there's a rising wedge formation. The rising wedge formation says, and at this point the high is 1797.50 and the all-time high is 1799.75. And what I'm looking at here is that in the daily chart, what you've got is a rising wedge formation with an inside track that is stuck in right now, resistance zone, and an inside track support zone. Now, these zones are very important. Why? Because that's where the price has been repelled before, and you just expect that that's where it should happen again. But that is a rising trend line. That can take you to 1801. So between right here, where it is at 1796 and 1801, there's a little room to play. I'm looking at a couple of other things as well. The support is at 1784 on the 9-period moving average, but the major support is at 1779. Take that out, you'll test 1779. You test 1774, that should be 1774, not 1174, 1774. And then there's a possibility you could get, because what often happens with a rising wedge formation is as you reach the apex, if you start to break the support line, you could in fact form what? A cup formation. We did that before. There was a rising trend line right here. Look at this. This is the edge. Friday's the day that I go into a little bit more of the technicals, and there was that wedge that I was looking at earlier on, back going into the end of October, and you got that little cup formation right there. Then it pulled back, and then it started a brand new move. So for me, it's very simple. Above 1799.75, you can start a leg E in the daily chart. Now let's look at the 120-minute chart. 120-minute chart is in leg C underneath 1799.75. So yes, it could fail, but the stochastics at 87, the MACD is still good. So I'm suspecting we might get a pullback. Hey, we might even close the day and the week at a leg D, and that might or might not be at 1799.75. Might be just under, it might be above it. But here's the real issue. The real issue is, if you're looking at the volatility index, I wonder if I've got it notated in the 120-minute chart here. Let me just see. Yeah, that was at peak D, and the volatility index is actually holding quite well above the 1199. Was it 1190? I think it was 1199. Yeah, 1199 low that was made on around about the 15th. And I'm going to be watching this closely because the 120-minute chart says not too much happening on the upside so far. The daily chart has that H pattern, which tried to make a breakout. But you remember the rule is if you go underneath the left side low bar in an H formation, you can rally. But the rally says be careful, because if you don't take out the left side highs, and quite quickly, in other words, it did take out one high of 1335 back at 4:15 on the 13th of November, but it didn't take out the high of the 7th of November at 1414, and it's pulled back. So this says, yep, another H to an M pattern could be forming, but this is going to be what I'm watching closely, news. If there is no bad news, it says, yeah, you might get a modest pullback, but you need to see the volatility index climbing together with what is perceived as bad news. Okay. Now, I wanted to do that, and then I wanted to go straight into something that I consider very important. I had a question in the den. I'll do the question first. Let me just see which was the first question. Z asks, Basil, where is your target to cover DDD shorts? So that's a good question. Because of my Chapman Wave methodology, when I got to this, when the 3D systems got to, let me just move this over right here. If you're looking at the Tiger charts on your whatever instrument you're looking at, you'll see that the left side is a daily. In my work, the weekly is in the middle, and the right side has the monthly chart. And what I was looking at, we missed going long. Not we. I'm the one. I did not put it into my Trader's Corner as a long. I kept wanting to, and I never did. So I missed out on just a fantastic move. But what I did do is that when it made that peak E, no, the leg E with the long-legged doji on, what was that, on the 18th, I was doing the 120-minute chart. My 120-minute chart said that there was a spike up, and it went to 84.76, and that, based on my looking at the MACD with a lower high and the stochastic just starting to look like it was about to turn down, and the relative strength was showing that it was going to turn down, I decided that I would put in a short for my subscribers, and we put the short in at 70. Oh, why have I got that right? At 80.60, and I don't know why I got that twice. It's only once. Just take that out. At 80.60 on the 19th. So that wasn't the opening. The opening was at 79.48, but we got 70. We got it at 80.60 because that's the price that I wanted to short it at. Let me see what it said here. This is a few days ago, and I said DDD small short at 80.60. Start a small short at 80.60 or better using a minus 2.20 buy stop. That was on the 19th. So we were very lucky because it opened a little lower and then it went to 86. Now, why did I do that? Technical Friday, I'll go through some of the technicalities. I have a way of looking at dojis that is just personal to my own methodology. And one of the things I noticed is that with a long-legged doji, there are certain characteristics about the actual body of the candle, which is usually very small, and the legs that are very long. And that is what I took into consideration, saying that even if it gapped down below my level of entry point, there's a good chance that it could try to sneak towards the close, which was at 69, wrong day, which was at 80.60. So that was my target, 80.60. We were very lucky. We got it at 80.60. Yesterday morning, it opened down. On day before yesterday, it opened down really sharply, and we were able. I said, let's take our profits at. I lowered the buy stops, and we covered at 70.60, 70.50 actually. Then today, I'll come back. Dow's up 3.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let's get back to that. Dow's up 6, S&P's up 3. So the question is the 3D system. So we took a really nice gain, 12.5% in a day and a quarter, not even a day and a quarter. So today what I wanted to do is I wanted to reshort it, which is what we did. And I wanted to reshort it at, can't even remember what I said today. I do so much work every day that I know what we got it at, but I wanted to just reshort it. And I said to reshort at 75.63 using a 1 point very tight stop. We were lucky we got it at 76. So the tight stop is held. The high so far is 76.50. And it's trading at 74. It's down 2 points from the entry level. I don't know if it'll work. It's just that it seemed to me, based on my 120-minute chart, which I drew and I showed subscribers, almost sure I put that in. I did the work. I hope I showed it. That there could be a bounce and that there was an arch formation. And there's that arch formation. That was the level I was looking at. I don't know if it's going to work or not because you just do the homework and let the chart tell you. So that was the good thing. Another question is, well, I look at the S&P. I'll do that in a moment. I'd rather go to the next chart, which is ROST, peak in the den asked me about it, which is Ross Stores. I've got an alternate wave count of a peak G in there was an instant restart, but the MACD was still holding really well. So I had to put a G/C in Ross Stores when it went to the high of the 18th of November at 81.99. Oh, I wish it had hit that round number. It didn't. And then The reason why I looked at it, but only too late, only when it was coming down, was I had a leg F in the weekly chart, and a leg F is what you want to see because that's what you want to short, best of all. The reason why I like 3D systems, DDD, is that all of them were in E, the daily, weekly, monthly were in E, and that's just the best situation. I don't know whether it will turn out to be a triple, what I call a hat trick top, because it'll take time and price over weeks and weeks and then months before it builds enough strength to have another big run to the upside. I just don't know yet. I have to see where it's going. The question is, where do I think it'll go on the downside? Let me just answer that question. If, and I really have to say if, because this looks to me like it has the potential for just a single leg A or even maybe a little bit of a B, and then it's going to arch over. If 3D Systems, trading at 74.05 right now, takes out today's low of 72.57, and it has to be very quickly. It has to be by Monday or Tuesday. There's a good chance it will retest the low of 68.30. My target on this was between 68.30 and 67.17, but it's really just a first target, because if it actually gets there, then 65.25 is the 9-period exponential moving average, and at that point, I think a lot of buyers will be wanting to come back in. So we'll just go step by step. Now, Ross Stores, as I said, we don't have any position in it. It was one I followed. I was just a little unsure here, and then I didn't know. I don't remember if I heard it or whatever, but once earnings came out and it plunged today, it pulled back so sharply, and yesterday was down right at the 9-period moving average. I realized I've got a potential leg F in the monthly. I've got a leg F in the weekly. Almost certainly by next Friday, it'll have made a peak F. I don't know what will take it back to 82. So I'm thinking that it's a peak F in the weekly. All I can say is that based on the pattern I'm looking at, over a period of 5 to 9 sessions, if 73 to 72 support is taken out, then immediately you're looking at 71.90 is being absolutely critical. If and when, I suspect it's a matter of when that is taken out, 69.34 is the level in the monthly. If it gets even close to 71 and it takes a full month into January, so 2 months into January, I'm pretty sure I'm going to be calling this a peak F in the monthly chart. But I'm going to have to wait. I'm going step by step, and we don't have a position, so I can take my time looking at it. It's just merely an academic exercise. Here's the next question. Just one more question that I have on the S&P, and I'll do the S&P right now because the next question is going to be on the Dow. S&P has a pattern here. Let me show you the SPY. I think it's a little clearer on the SPY. You see the SPY trading at 180.23 has the pattern that I call the falling axe pattern. This is the declining cone formation. When it happens after this, the body of this stalk leg formation, I have to consider, was that just a real quick stalk? Was that the beak? And now we're breaking to a new high and it's something completely different? That's one thing. The other is sometimes it's a little bit complex. And this pattern, when it happens after a really strong rally, this falling axe pattern gives you just one more move to the upside, then it comes right back into the pattern and come back to 179. So I hope that answers that question. And we're back. Hi, Mike in Ormond Beach. Mike, you wanted to look at?
Long-term view of the Dow.
Great. I'll be right back with Mike in Ormond Beach, and this is a perfect time to be looking at it at all-time highs. I'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Just during breaks, I've usually moved on to about 3 or 4 or 5 different charts. So I forget that before the break, I was about to finish a sentence. I never finished. I did want to say on 3D systems, I am wrong about it going lower. If there is a breakout and this is a false break to the downside, because if it goes above 77.80, there's a chance that counter trend rally could be much stronger. I just wanted to get that out because I always like to look at both sides of the coin. Now we're going to go back to Mike in Ormond Beach, and we're looking at the long-term picture of the Dow. We'll talk about the Dow and the S&P at the same time. So this is just a general information question, right?
Yeah, I mean, at this time, correct me if I'm wrong, but we're still in leg D in the monthly, correct?
Correct.
And I thought I heard in one of your archives during the beginning of the week that you thought that possibly how you think this will play out is we might get one decent pullback, maybe 15 or possibly 20%, and then kind of scare everybody, and then go up to our next higher level, and then possibly put in our major market top and major socio-economic top.
That you've summed up very well my thinking. Within the thinking itself, I always like to separate fact from fiction. My thinking is fiction. That's just whatever is in the back of my mind, front of my mind, side of my mind. It's got nothing to do with reality.
Right, but you have a pretty good track record, and you've been one of the most accurate market technicians that I've ever listened to, and so your opinions are very respected in my book.
Thank you very much. I really do appreciate it. And so now what I'm looking at in terms of leg D, I had shown a chart. I'll show it here. I hope it's this one here. Let me just see if I've got it sitting waiting for me. Ooh, I'm going to try to find it. I'll show you a chart that has something consistency, and the consistency is really what I look for in chart formations. Yeah, this is the one. I'm showing the monthly chart of the S&P, and it goes back to, actually I could go back to 1920, but right now I'm just going back to 1994, and since 1994, every peak C to peak D was very quick, and then there was a pullback. There were a couple of exceptions where it went to C and D wasn't the major top, even though it was a very quick C to D, and then it would go on to an E and an F, which is what happened, I think it was 98, let me just check. Yeah, 1998, when the S&P went to 1190 and then came tumbling down. And then it went to another A, B, C, and then a very quick C to D for the all-time high at the time of 2000 at 1557.87. Plunges down, and then it starts again. It goes A, B, C. This is one of the few longer C's to D, but then it went very quickly D to E, and that was the high of March of 2005. It holds the 9-period moving average, and it continues high, and then it goes C, and then again it takes a longer. So the very first one from 1994, no, actually 1993, the low there, to the high of 2000, every time C to D was very quick, even though once there was an extension higher to an E and an F. But that's a fantastic track record in a monthly chart. Now what we get is something a little different. It goes C and a longer period to D, but then it quickly goes DE. It does that once in 2005. It does it again at the October high of 2008. It goes C, sharp pullback, holds the 9-period moving average, and goes 1 month, 2 months, 3 months, 4 months to a D, pulls back, and 3 months later it makes its high in October. And if anyone remembers, that period going from the August to the October high was where shorts were just everywhere, everywhere. And fortunately, the waveform took us to that E, which was a recognized E, so that we could wait a little bit before we actually decided that that could, in fact, be a more serious top. Well, it plunges down. The last plunge from back in 2000 to the low of October of 2002 went to a trough E. On the way down, we look at lowercase letters, and we call them troughs, and it went all the way to trough E. Goes all the way up to that second buy mode to an E, pulls back and comes down to a trough F at 66.79 March of 2009. It goes up, and what does it do? It goes, now this is, I love this because markets are like, I had an image in my mind, and it just slipped. It was so perfect, where you get one thing that happens consistently, and then it changes. I was thinking of music. I need to be a musical relationship. And then what happens is, in the next sequence, it combines the two. And what has this done? The very first move from March of 2009 to the high of May at 1370 of 2011 was a very quick C to D, one month, pulls back, and now we've got that repetitive pattern of the long C, peak C taking quite a while to make it. We haven't even got it yet, peak D. So what can I anticipate? My anticipation is that we will get a peak D, have a very sharp pullback, and then we will just run up to E, and maybe this time we'll get an F, just as we did back in 1998. I don't know. I'm just saying that there is enough evidence in the stochastic is starting to look the same. The MACD is looking the same as that period going to 2000. I just don't know, but all I can say is that at this particular point, the resistance line, now I'm going to make it go back to the other chart that I was showing a moment ago, that very long-term inside Chapman Wave inside track resistance between the red line, which is usually the sell zone, and the green line, which will be a breakout, and that green line right now in November is above 16,322. Let's call it 16,250 in the Dow, and I can give you the same thing in the S&P. And the S&P, we're almost there in the S&P, so we could even break that. It's a much steeper incline. Oh, we're right. Oh, there it is. And that looks beautiful. Let me just, I like to have things exactly even. So, yeah, the S&P has maybe another 18, 14, somewhere around there. So that's now 140 maybe points in the Dow. So the S&P to break out, oh, I should make that green. Of course, this is a green line. To break, if the S&P breaks into the 1820 area, we might even have started this coda, this big final phase. It could be a spectacular phase. I don't know. I would, like many people, I would love a 15% to 16%, 17% pullback to restart and rethink and look at sectors that could go into this next phase. I just don't know. And for me to even have the audacity to call it a final phase when I have absolutely no clue other than all these socioeconomic parallels, it's presumptuous on my part. But that's kind of what I'm seeing. And one by one, as you know, if you're listening to my show, I keep talking about him. So now let me answer your question. I'm still longer term very bullish on the market. On the shorter term, there's this pattern that I've been looking at. Oops, I just took away the wrong chart. I'm looking at a pattern that said we had 28 days to the August 2nd high. So far, the only thing that's matched it is that up until this very minute, and that could change in the next 2 minutes, we have not made an extension to the peak F to recycle it. And I really don't think it's a G. I think it's going to be a recycle in the daily chart to a C, which will take me into next week before we can even get a pullback. And very often, Thanksgiving week is a good week. So the answer to your question is, I have to remain very bullish. If we continue these massive rotational corrections, that can buoy the market so we don't have to get a 12% pullback. My suspicion is everything I'm looking at on the shorter term says I've got to spend a lot of time this weekend thinking through, do we have enough time? Because markets that go strongly into the second week of November, to my memory, I meant to do that on the show today to actually check it out, but to my memory, most of the time, markets that act very well into the middle of November close the year almost at the highs. So that's kind of the way I'm looking at it. So I hope that answers your question to a certain extent. And major support in whatever happens, major support in the S&P right now. I'm talking about major. If there's just a bad news situation and everything, major would be 1754, not that far down because that's the 9-period moving average in the weekly chart. So I have to just deal with things as I see them. I really hope that helps you.
Yeah, and something I'd like to add, socioeconomic-wise, in my area, which is near Daytona Beach, Florida, I've seen a lot of churches build brand new churches that are much bigger and better than their older churches.
I'm so pleased you brought that up because that was on my list. I did mention it about 2 years ago. There was a design of a synagogue here in I think it was Lincoln or Wayland or something here in Massachusetts. A beautiful, beautiful modern building, and it was quite expensive. And I said to myself, wow, it coincided with a number of major repairs. I meant to show that in the Boston Globe the other day. One of the churches in downtown Boston, they are spending a huge amount of money to redo it. And I thank you for bringing it up because that is part of it. In fact, I don't have time now because I do want to get to Vic who's waiting online. But if you go back to the Renaissance period, all those magnificent churches, that was a status symbol. And if you look back in history, those big churches remained even after the whole thing in England where the church, I mean, there was this whole, with King Henry, there was real problems. So all I can say is that everything is fitting the pattern of working its way towards a pretty darn serious top at some point. But I think it's going to take months before we get there.
Right. Okay. Well,
thank you so much for calling, Mike.
In my area, just that for interest. Okay.
Thank you so much. Yeah, thank you very much. That was noteworthy. Thank you, and have a great weekend. Let's go to Vic in Grand Rapids. Hi, Vic, how are you?
Hey, Basil, how you doing?
Very well, thank you.
Hey, I've got two ideas that I'm wrestling with here, and one is I've got a 10-day, 60-minute chart up on the SPY.
Okay.
And it looks like the last 3 days we've come up and we're riding a back test of a broken trend line. If you just go back 10 days, now if you go back longer, it won't work. But just the last couple of days.
All right, I'm going back to. I've got a 120-minute chart, which would be close because it's all notated of the SPY, and that takes me back to. Well, I could go back as far as I want, but even going back to the 25th of October, that's good, right?
Well,
maybe that's too far.
Mine goes back to November 8th.
Okay, that's fine. I'll go to November 8th as well. There we are. Okay.
I snap a channel across the bottom there, and it looks like what we're doing here is we're just riding a back test of this channel. We broke it on November 20th, and now we're just coming up and riding it. And then I look at that, and then I look at the VIX, and to see if the VIX is repeating a pattern that started like on September 20th.
Right, that's that arch formation that goes to an M formation, right. So let me just do this because I've got a channel now that I've drawn. It should be like that, okay, down a little bit higher. I like to get my channels exact. I can do it visually quite well. So what I'm looking at, there's a V-shaped pattern in the 120-minute chart. So let me see if I can get it onto a 60. I'm going to make a change here. There we go, 60 minutes. Good luck. Okay, 60 minutes has the same pattern. The letters are wrong. But the pattern that I'm looking at says that there's a left side, right side price time match to the low of at 3:30 yesterday on the 20th. On the 20th, not yesterday, on the 20th. And that takes you to a test of the high of 180.50, and that can go into the 22nd at 4 o'clock today. So we've got another couple of 60-minute charts, and then there might be a retest, and that would be leg A, B. So far, it's still only leg C in the 60-minute chart, and funnily enough, on my 120-minute chart, I think, let me just go there, format symbol. Okay, now, so your point is that you've got the channel lines, and the channel line on the upside still has a little bit to go, right?
Looks that way.
Yeah. So let me just do this because I want to. I've done the 120-minute chart in a little bit more detail, and I'd like to do that here as well. Format, so that'll be 120. Here we go. Close. So this is what I'm looking at. So folks, what Vic is looking at is. Let me just move this away, and you'll be able to see it a little clearer. There you go. And he's got that channel, and he's got this channel right here. And this channel, in fact, just nicked slightly. It's pretty much sitting on it. Yeah, that's what I'm looking at. So in this 120-minute chart, if 180.41 is not taken out, no. If 180.40, it doesn't go above 180.40, that's going to make it peak A, peak B, peak C. So it's the same thing. Oh, this is interesting. Can you hold on, Vic?
Sure.
Okay, so there are a couple of things that we can discuss here, and we'll talk about some technical aspects of the Chapman Wave methodology. I'll be right back. Dow's up 14, S&P's up 4.5. Tiger Traditions, I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, yes, I must remind you, please listen to Nico and Paige. Just a great show coming up. Great shows all afternoon. And I have the pleasure on Monday at 4 o'clock till 6 to be doing Tom O'Brien's show, so I'm looking forward to that. Let's just get back to Vic. So, Vic, what I'm looking at here is that, yep, there's a channel. Within that channel, I'm doing this live on TV so people can see. I love to take the bottom line and then draw an inside track, what I call this green line where the support levels are. There's not a fixed level, but it's usually a very small track, a little channel below the major uptrend line or downtrend line. And that's going to be green. The exact same line on the upside comes in round about where all those prices hit. It's a little wider than normal, but it comes in, and that's going to be red. And that red line says at about 181.21 on the SPY, that's where you can expect resistance. If it goes higher, then that channel line, which is way up at 181.90, that was moving every time to the right. That will become the support level. But in the meantime, back at the range, I'm looking at peak. This is leg. What did I say it was? Leg B in the 120-minute chart. Am I right? Yeah. 68. Yeah. In the 120-minute chart, it's B. In the 60-minute, it's C. So we'll see. And this can fail if it fails underneath the previous high. But at this particular point, the stochastics at 80%, 84%, the MACD is good. So I hope that helps you.
Terrific. Thank you.
Thank you very much. That was Vic. Now, then, folks, I wanted to, it's all very well talking about all the good things. It's important for me to also talk about things that I miss because it helps me clear my mind. There are two things that I'm looking at for now. I had a question in the den about a stock that we own, which is Sprint, a Sprint Corporation, which is Sprint Nextel. We bought it in the 638 area. It hits 819 yesterday, and right now it's at 788. The question was, why did I make the stop? Did I lower the stop from yesterday? The reason is it's acted so well, I might want to add it. So if I'm going to do that, I lower the stop on the core position. That's the good side, at 25 or 20-something% gain. That's okay. Today we took a hit on IBB, and I've been a little stubborn, not a little stubborn, very stubborn about this. Why? It looked to me like the biotechs were going to fail. Well, you all know what? They're at all-time highs. I know it's not a big deal. We've had 1%, 2%. Today is actually a 3% loss. They do add up. That's the thing. But it wasn't the point. The point was that I'm misreading what was right in front of me. I thought that it was going to do a certain pattern. But if I'd followed my rules, I would not have been shorting. I would have said wait or go long, because everything about it was positive. I had the up arrow and everything. This is one of those stubborn things. I did not do this correctly. The chart was right there. I did not read it correctly. It's trading at 220 right now, at an all-time high. Leg E in the, could be even B, but it's leg E, at least for now, in the weekly chart. Leg D in the daily. Could have turned around from, yeah, sure, but hey, a breakout like this is really powerful. That's number one. Number two is, I had a caller recently, and we were looking at GMCR. And I looked at it, and it was trading at about, it was right here, it was right here. It was trading at about the 63 level. And she had been in it for a while and was down. And I said to her, you've got to put some kind of a stop in. And the stop I had recommended was very close by, number one, and then a little bit lower, just a little bit lower down. Well, it went from the 65 level to 56.87. I don't like to take that kind of a loss, especially when you've already had a loss. Now look at the thing. It makes a trough F. The MACD starts to move up stochastic, and it's trading. It hit yesterday, hit 73.57. Now, this is always very tough for me. I did the best I could. My thinking was that the earnings report would come out and it wouldn't be that good. Well, I felt satisfied that getting out in the 63 area when a stock goes to 56.87 is a good call. And now I look at it and I say, gee, how could I have helped that person in a better way? I'm still thinking about it, but I wanted to bring it out as a good call, but looking lousy at this particular time. Folks, stay tuned for the great
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.